Greetings. I welcome you all for this wonderful segment. My name is Sir Eric W. Hissa. I'm a coach, a mentor, and also a trainer when it comes to online businesses. I've been in this field for the last 11 years, e-commerce 5 years, the issue of blockchain technology, and the issue of online trading in the last 6 years. And through the journey for the 11 years, I've seen there's one big gap that we are missing at the marketplace in Africa, the issue of providing skills to our people. Our schools or universities and colleges, they're not providing real-time solution when it comes to the emerging technologies. Right now, the world is moving at a different speed, and the only way for us to catch up with it is when we are able to learn and to learn again. So we have come up with a platform known as Blockchain Academic Hub, where we provide knowledge and skills in 4 things. Number 1, the issue of cryptocurrencies. Number 2, the issue of blockchain technology. Number 3, the issue of e-commerce and social media marketing. And number 4, we provide full training on the issue of online trading. This evening, we are putting our focus on the issue of online trading, because online trading is divided into 3 segments. Number 1, apart from providing skills and knowledge, we also provide signals on the crypto traders and Forex traders. In that, for those who cannot trade online, we also connect them with the national companies that can trade for them. Lastly, what we are going to share with you is just a tip of what we provide. And tonight, one of the leaders, known as Mr. Ben Yawa, he has been in online trading for the last few years. I've worked with him for a few years also. And today I want him to take you first through the introduction part of what we are providing at Blockchain Academic Hub. And remember this, always say this at Blockchain Academic Hub, that making wealth online should not be a hassle. This is the only place where opportunity meets skills. Welcome.
Hello everyone, my name is Ben, and I'm here to take you through the topic of the day today. We're going to talk about online trading. First and foremost, we're going to do a lot of introductions, define a few terminologies as far as online trading is concerned. So the first one that we'll be looking at that we're most familiar with is the aspect of trading. Trading is the aspect of buying and selling of goods and services for profit. Well, that's basically what trading is all about. But when you now talk about online trading, then you're talking about trading on the internet or on the net as far as trading is concerned. So when we talk about online trading, we have trading has to happen on a market. You have to do trading in a market or on a market. So the aspect of online trading, we do that on the financial market, online financial markets. So we have different financial markets. Financial market, basically, this is where you get an opportunity to buy and sell commodities, buy and sell whatever you're buying and selling online. So when we talk about financial markets, then we are buying and selling everything to do with finance or everything to do with money. So we have different markets of finance where we buy, you can buy and sell currencies online, you can buy and sell stocks online, you can buy and sell shares, as far as the stock market is concerned, and so on and so on. So we, being the first lesson of the day, we're going to do a lot of introductions, as I've already mentioned. We're going to define different terminologies that are used in the online trading platform. So the first thing that we'll have to look at is the components of the financial market. Okay, the market is comprised of 2 components. The first one is called the primary market, and the second one is called the secondary market. The primary market, this is where the issuance is, where the first time a commodity or a product is issued for the first time in the market, where people can now purchase, buy and sell. So in this case, if we were to talk about a stock, this is the first time it's being released to the market, and you could refer to this as an IPO. You're buying that stock for the first time. But when we talk of the secondary market, then now these are markets that are, after the issuance. So now you can now trade online. A stock has already been released in the market. Now it's listed on an exchange. Trying to make everything clear so that I don't, create a lot of jargon around it. Is that now after the stock has been released for the first time, people buy it using IPO, initial public offer, and then after that, with time, then we have a secondary level or secondary component of the market where now that particular stock has been listed on an exchange, and in that case now people can be able to buy, purchase, buy and sell that same stock, but on the internet, either on a securities exchange or on the stock market, and so on and so on. So I know I've been talking more about the securities, the stock market, but then that is not the only way of trading the financial markets. The financial markets are in different markets, just like the stock market I've already mentioned. Now we also have the Forex market, or the foreign exchange market is also called the currencies market, where you buy and sell currencies online, and this is done digitally. You don't have to, you're not talking about a Forex bureau where you set up a shop and you buy and sell currencies physically. We're talking about online trading or online buying and selling of currencies, where you exchange one currency against the other. And I think we're building on the aspect of trading. Remember, I told you that trading is all about buying and selling. So in this case, when you're talking about buying and selling currencies, you have to use one currency. You're buying one currency and you're selling the other at the same time. I'll give an example or a scenario. You're leaving your country, you're going to the other country, the neighboring country. In this case, you have your local currency, and now you need the currency of the country you're visiting for you to be able to transact within that country. So in that case, you will sell off your currency and buy the currency of the country you're going to. So in that case, you're working with two currencies concurrently, simultaneously. You're dealing with two currencies at the same time. You've actually traded currency in the basic terminology, the basic way of trading. You've bought one currency and you sold one. You gave out one and you collected one. So you're traveling to the US, you're leaving Kenya, you will use the Kenya shilling, you buy the dollar. So you've transacted two currencies at a go. So that's why in Forex, or in the currencies market, we talk about Forex pairs. That means that you can't talk of trading without involving two currencies. So you have two currencies, and these are called currency pairs. So every time you're trading, you're working. If you're trading the currencies, every time you're trading, you are actually dealing with two currencies all at the same time. So you have the US dollar, you have the Kenya shilling, you have the British pound, you have the Kenya shilling or the US dollar, you have a Japanese yen, you have the Canadian dollar, you have the Australian dollar, you have a Swiss franc, all together, working together as a pair. So in Forex, therefore, we talk of currency pairs. Now, because we are defining things in this first lesson, or in this first call, we then have to do what we call, these two currencies, what are they called apart from the names? The name, the US dollar, the name, the Canadian dollar, that is a name. But what are these currencies called basically, professionally, in the professional sense of trading? These two currencies, we call them base and quote currencies, because you're buying one as you sell the other. Okay? I'm giving out my Kenya shilling and I'm collecting the US dollar. So I'm selling off the Kenya shilling and I'm buying the dollar. When I come back home to Kenya, I'll have to do what? To buy the Kenya shilling and I sell off the dollar. So every time you have what you call the base and quote currencies. Now, how do people make money? This is, a basic way of explaining trading. But then how do people make money trading these currencies online? How do you really make money out of it? We make money when the price of these currencies, because the price of these currencies do not stay at the same point. You'll find that today the Kenyan shilling is $1 is 110 shillings, $1, 110 shillings. The next minute, the next second, the next hour, the next day, the next week, the price will not remain at that same price. So if that is what is happening in the physical world, then what happens on the internet? What happens on the internet is that the price is always printing. Okay, it's always moving up, down, like that. At times it keeps on going down like that, go up, down, up. I'll be able to tell you with time what that up, down means, or high and low, what that means. But in the meantime, we make money when the prices of these commodities or these currencies change in value over time. So you can capitalize on that if you're in a position to determine where the price will be the next minute, the next hour, the next day, the next week, the next month, the next year. Then your prediction is accurate. Then that's how you make money. You predict, for example, that the Kenyan shilling is going to lose its strength against the dollar. What that means is that if you buy today a dollar using Kenya shillings, you use your 110 shillings to buy the dollar, and you predict based on what you know, based on the skill you've developed. And that's what this is all about. The need for thesis for you to be able to develop a skill to be able to make accurate predictions in the market. So if you're able to predict based on past data, where you go into the technical analysis and be able to predict where price will be the next moment, then you say, okay, the dollar is here, the Kenya shilling is here, tomorrow or after 5 minutes or after 5 hours, this is where the price will be. You are informed by the skill you've developed over time, and you're also informed by the other factors that we'll get into when the time comes. And that will mean that as the price goes up and you exit the market, you sell off that dollar, you convert that into the Kenya shilling, you're selling at a higher price, so you've made profit. Now that is the traditional way of explaining things, but on the internet things move very fast. The markets are open 24 hours, 5 days a week, and price is moving very fast. So you can actually make that catch within the next minute, next 5 minutes, next 15 minutes, 1 hour, 2 hours, 4 hours. It can take, short time or long time. So we have different types of trading, and that we'll get into later on in terms of how long do you want to wait for your trade to close so that you can take the profit or admit a loss. So that is what basically trading is all about. So on the internet, things move very fast. The next aspect I'd like to get into at this level is to talk about the players in the market. Who are the players? Who are the people? Who are these guys who trade the markets? We have what you call the central banks of different countries. They trade the markets. We have the top banks in the world, like HSBC. They trade the markets. These are the big players. We have hedge fund traders, we have speculators, then we have other traders. These are called retail traders, which is you and me. We are not an institution. We are not you and me. We're individuals. We're finding an opportunity to trade the market, open an account, put in some money, trade with it, make profit, and get out of the market. We are called retail traders. And as retail traders, we account for the 20% of the entire market population. So that means we really have to, for us to be profitable, we need to learn what these big players do in the market for us to be in favor, for the market to be in favor of us, or else you're going to lose money. You're going to, make losses, because in trading, just like traditional businesses, people make losses. Okay, so this is not insulated. You have to make at some point to make losses. But then what differentiates you from other traders is that you have to turn yourself into a pro trader. And that's what I like about Blockchain Academic Hub, where it will be able to work with you, to mentor you, to go through the training until you gain the necessary required skill for you to become a profitable and a consistently profitable trader on the market. So you develop the skill well enough, the element of risk is there, but risk is inversely proportional to the skill that you've developed. So if your skill level is wanting, automatically you're going to your skill is low, your risk is going to be higher. But as you grow your skill gradually, the risk diminishes, because your skill, you know what you should be doing on the market, you have the right psychology, you have the right, you're prepared for the market. Then as your skill is going up, the risk diminishes, and very soon you now become a consistently profitable trader. So you need to develop the skill first. I cannot overemphasize that, because if you don't do that, then you'll be gambling on the market. Okay, because trading involves buying and selling, two things. So it means you can as well, decide I'm buying, decide I'm selling, and you might get lucky to win the trades, but then you're not a professional. You're a gambler, and gamblers always, at the end of the day, they lose money, because the house always wins. So what will make you differentiate you from the other, gamblers on the market is for you to be able to develop the skill. You will own this skill for the rest of your life. You can lose everything. You can lose your clothing, your car, everything, your home, but you can't lose that skill. That skill will be with you forever, and you'll be able to benefit from it anywhere. If I was to live here, get out of my country, all I need is a good internet and a phone, if I'm lucky, plus a laptop. And that's all I need. And of course, a small amount of money as capital. And I'll begin doing that. So that's all you need. That's why the skill cannot be overemphasized, because this skill will pay you for life. Most importantly, the skill will be able to cut off the risks, will help you to cut off the risks, because trading is very risky, but then the risk is inversely proportional to the skill as already mentioned. So that is what actually goes on in the market. And so we have different styles of trading. As the second last thing I'll mention because of time, the different types of trading, we have what we call scalping. Okay, you're a scalper, you say I'm a scalper. Okay, somebody else will say I'm a swinger. Okay, so we have scalping, we have day trading, we have intraday trading, and we have swing trading, and lastly we have position trading. So again, I go scalping, day trading, intraday trading, swing trading, and position trading. So what is the difference? What is the difference with all these? Scalping means you're going for quick in and out of the market. You perceive, you sense there's an opportunity in the market, quickly jump in and come out. You either come out to the profit or with a loss. Okay, you're a scalper. You're going for in and out. I'm not here to judge, because there are other traders, especially the swing traders and position traders, who will tell you, position trading, scalping is for babies or so. No, I know of professional, high-ranking professional traders who enter the market sharp, and they come out with profit or a loss, and that's it. That's what they do. So none of these is superior to the other. It depends with who you are, what amount of capital you're trading with, because for you to be a position trader, you're holding a trade for more than 6 months in a year. You can't make a living out of that if you're a retail trader trading with less than $1,000. So what will you be feeding on? Okay, so you can't. None of these is superior to the other. So you are a scalper, I respect them. Day traders, I respect them. Intraday traders, I respect them. Then swing traders, and so on and so on. So scalper in and out of the market in the next 1 minute, 2 minutes, 5 minutes, at most 15 minutes, you're out of the market. You're a scalper. Okay, you're scalping. You're like a hawk. Okay, and so on and so on. So that's scalping. Number two is that we have day trading. A day trader is one who opens a position in the morning. Assumably, you open a position in the morning, and in the evening you close that position, either manually or automatically. Okay, manually you close the trade, or automatically you've set the targets. You say I'm entering this trade here, and I'd like to exit here. So when the market is moving, by the time it hits there, it will have hit you out of profit, or if it went against you, you have a stopper below your entry price, which will help you exit the market in time within the same day. In the course of the day, before the day elapses. Okay, so that's a day trader. That intraday trader, as the name suggests, that means you're opening a position, and it might as well go past a day until tomorrow. So it can go until tomorrow, or at most a week. That's intraday trading. So you may open a position and you're patient enough to wait for the big move, or whatever happens, but you can wait. You're patient enough for that. And so these are people who have good amount of money, where if they open one position, that position can still feed them, can still pay them, can still give them what they're looking for in the market in a week. So that's what intraday trading is. And then swing trading, you can go past a week. You can take a trade and it will go, you're using what you call the higher time frame. When we turn to the charts, we'll be able to see this. You're using the higher time frame to do your analysis and entry, and so you can wait for at least a week. You're swinging the market. You can open a position in the morning. What I mean by open a position is that you enter the trade, or you trade. Open a trade like click buy or click sell on Monday, and you can wait until the end of the week, or at times it could cross over to the following week. And that's what swing trading is all about. Position trading, these are people who can wait for long. Okay, people, institutions or banks, You open a position and you can wait for a week, a month, at most a year. There are trades like that. So that's what position trading is. And so those are the different styles of trading. So today we've been able to mention a few things. We've done a few definition of basic terminologies. We've looked at what trading is all about, what trading entails, what trading, what do we really do, what is the difference between, because that's what you should be looking at most, the difference between physical trading and online trading, because here we are talking about online trading. We are trading the markets online. So you should be able to know that what are we doing on the market. So, and I started by mentioning the stock market, the shares, then came to Forex, but these are not the only markets that we have out there. We have other markets that we'll be mentioning with time. But why did I take more time on Forex? It's because Forex is the most liquid financial market, is the biggest financial market. Over $7 trillion are exchanged on the Forex market every day, Monday to Friday. Over $7 trillion. It's the biggest financial market. Most of the traders we know, more than 90% of the online traders are Forex traders. So that is why I took much time to explain more about Forex trading. Again, this is just an introduction, but with time we'll be able to know. I also mentioned the currency pairs, that when you're trading currencies, you're always dealing with a pair, one currency against the other. You're buying one as you sell the other, and so the same happens online. So that is exactly what happens as far as introduction to online trading is all about. And now for us here, we are here to give you an opportunity. It is just an eye opener. The potential to make money online based on what I've mentioned. If an industry is $7 trillion a day, that means you have a stake. If you sharpen your skill very well, you know what you can do. At times I wake up in the morning, I open a trade, I live with I keep sharing with my friends, and I'm like, okay, I have here $5. What do I do with it? Let me see what I play around with it. Before you know it, it's $25. Does that happen every day? No, because not every day is Monday, not every day is Christmas. I'm just telling you the possibilities of what you could do on the internet if you know what you're doing. If you're skilled enough to know what you should do, the market will feed you for life. Okay, so that is what the industry is all about. The trading industry is big. We've seen the biggest people making a lot of millions of dollars, millions of local currencies on the internet, and it's very, very possible. The condition is you must be skilled, because you can't be a gambler and be profitable consistently. You can gamble and make profit today, but you'll end up losing anyway. But with time, once you develop your skill, you become consistent, then you can almost always be sure that you'll be able to make profit no matter what. So you can develop daily targets, weekly targets, and so on and so on. So what is the profit potential? The profit potential is actually massive. The sky is not the limit. You can make a lot of money if you know what you're doing, if you're skilled enough. Does it mean that we make money always? No, at times you make losses, and that's what I want to finish with, because it would be unfair of me to complete this series without mentioning the risks involved. Number one is that trading, it's possible to make losses even if you are the best professional app. But what differentiates between professional traders and amateurs or gamblers? The difference is that I am consistent enough. I know my winning rate. It means out of 10 trades, I know that I can't lose more than 4 trades. So what is my winning rate in that case? Over 60%. Now, that is not the catch. The catch here is that of the money I'm risking, what am I going for? I'm risking 1%. How much am I going for in the market? So if I risk 1% and I want to go for 5%, then I have a good trading style, because I can enter 10 trades, lose 5 and win 5, and I'm still profitable. I want to illustrate that. So I have a winning rate of, let me even turn it down to 50%, so that out of 10 trades, I win 5, I lose 5. So I have 5 winners and 5 losers. Normally, that means it's a break-even market. But this is where the beauty is when it comes to trading. I can design my strategy that I'm going for 2% as I risk 1%. I'll illustrate the point. That I'm risking out of my account of $1,000. When I enter a trade, I'm risking 1%, which is $10. So this $10, what I mean by risking, it means that when you enter a trade, I didn't tell you the design of a trade. It's like the anatomy of a trade. Is that you're entering a trade. When you enter a trade, you're either entering a buy trade or a sell trade. So let's talk about a buy trade in this example. That I'm buying the Euro USD at this price, and if the market, when I buy it, means I expect the price to go up. So I buy at this level, purchase at this level, and I expect the market to go up wherever it will go, but I'm only targeting 2%. 2% of what? Of my risk. So I'm entering here, I put my stop here. It's called a stop loss. That if the market goes against me, I want to exit the market. I'm willing to lose 1%, but I'm targeting 2%. So I'll make my movement. That is what I'm going for. So with this illustration, I have a risk of 1% and I have a target of 2%. So if my trade goes against my analysis, then I will lose the trade. I've lost one trade, I've lost 1%. But if I win a trade, I've won 2% of my account. So using my example now, I've entered 10 trades, I've lost 5, I've won 5, which does not happen anyway. The least I've ever done is lose 4 out of 10, the least. But then because of my strategy, see what happens here. I've lost 5, I've won 5. So I've lost 5. But I've not won 5%. I've actually won 5 times 2 because my target is 2%. So 5 times 2 is 10%. So I've lost 5%, but I've won 10%. So what is my net? Take home. I have a net of 5% profit. That is the beauty of it all. So we can have, so you have people saying, if you hear somebody saying, I've never made a loss, they are lying. I've actually made a loss, but then my winning rate and my strategy of risk management speaks for me that at the end of the day or at the end of the week or at the end of the month, I'm on top of the market. I'm at, in profits. I'm a winner. So that's what it means. So that is the beauty of it all. And all these will be mixed together. They're all put together as nice modules for you to go through, review the lessons. And we are here to hold your hand for you to be profitable in the market. Nothing beats this. The skill is all you need, and as you go through your investments, do this and that, get time to go through the lessons. They are very, very, inspiring. You will not get bored. You'll have, different engagement for you to, begin doing your calculations and so on and so on. And so the beauty of trading is that it gives you the freedom to do anything, anywhere, anyhow, so long as there's internet, you have your smartphone. Almost everybody today has a smartphone, almost everybody. So you have the internet, and you can take advantage of that, make use of that, and it will pay you so handsomely. So today, I think I'd like to conclude our presentation for today right there, so that now our next modules will be going deeper into this. But this is all you need. The beauty of trading is the freedom that it accords you because of how much you can be able to generate in a week, in a month. There's nothing beats this. There's no other industry that will pay you than this, unless you're in professional sports, of course. So if you're not in professional sports, trading should be your thing. It beats traditional business. You talk of somebody before this session, we had a meeting with a friend of ours was looking at this with a bigger picture. Like, if I have 50 million Kenya shillings, I'll put up a structure and it will be paying me $5,000, so 500,000. Okay, 500,000, 50 million paying me 500,000 at the end of the month. That is like, is it 1%? Is it 1% or 10%? I think so. Close to that, 10%. But if you are to turn the same 50 million Kenya shillings and trade, 50 million Kenya shillings is around $500,000. Can you imagine $500,000 and you are taking home $5,000? It's actually 1%. That's what it means. $500,000 paying you in real estate 1%, $5,000 at the end of the month. That's wasted economy. Think of it. I don't need to have $500,000 to be making $5,000 in Forex at the end of the month. I need $20,000 to be making $5,000 every month consistently on the market without over-leveraging. Think, how about that? So while somebody's, saving and be able to raise the $500,000 to make 1% a month, I can make 1% in a day. Thank you so much. So if this is not if this is inspirational enough, then join us on our subsequent calls, and be sure to to follow through the trainings, because we are here to take you through these steps one by one. And we appreciate your time. Thank you for giving us time to to be able to present this to you. All the best, and I will see you again on the next call. Cheers. Once again, my name is Ben, and thank you for your time.
So I appreciate Mr. Ben Yawa for the good presentation you have taken us through the world of online trading. Online trading is a $7.1 trillion industry. This is an industry, if you take it seriously, leaders can transform your life in a big way. Out of these training leaders, we want to equip you with knowledge and skill, and we have come out with the Blockchain Academic Hub, whereby you get training on online trading. This involves Forex trading, crypto trading, the issue of shares, the issue of bonds, hedge fund, on the international market, and everything rotating around online trading. We provide full training on it. Apart from that one, we also provide mentorship. After learning, you will get a teacher who walk with you through the journey from step 1 to the last part. Number 2, we provide signals. For those who already know how to trade, we can give you signal. On Forex, what do you trade this week? On crypto, when you come along on the shares, worldwide, the world platform, which company are the best for you to buy shares from? Lastly, for the people who don't want to learn, maybe they don't have time. For the people who don't want to get the signals, because I think also the issue of time, maybe the working class, we can also connect you with an international company that can trade for you. We can connect you with the companies which have been working for more than 10 years in the issue of online trading. They can trade on your behalf, and they can be giving you returns either monthly, quarterly, half yearly, or yearly. It's for you to choose. So this is the time for you to take action. At Blockchain Academic Hub, we believe in one thing, that creating wealth online should not be a hassle. All you need to do is to talk with us today. When you come to learning, we have 2 packages. We have basic package at $300, and we have the professional package at $1,000. So, to get to understand more, you can contact us through this number. If you are online, you can connect with us either on Facebook, either on WhatsApp, either on LinkedIn or Instagram through these channels. And if you have more questions that you want to ask right now, we are going to answer it in the next few minutes. I take this opportunity to welcome you all in the Blockchain Academic Hub, the only place where skills meets opportunity. Thank you very much.